What's going on, family? Welcome back to the channel. Today we're talking about the VA loan and what most borrowers do not know about the VA loan. This is one of the great strategies that you can leverage if you're a veteran or military member. A VA loan is simply a zero down mortgage option issued by private lenders and partially backed or guaranteed by the Department of Veteran Affairs. Eligible borrowers for a VA loan, they can use a VA loan to purchase a property as their primary residence, or they can use it for a refinance. One of the great things that I didn't know it initially when I used my VA loan first, but you can use a VA loan to buy all the way up to a 4-unit or a quadruplex. So traditionally you think you have a single family home, but you can also buy a duplex, a triplex, or a quadplex using your VA loan. And so that's one of the cool things that you can do. Even if you have a VA loan, you can also refinance with rates decrease in the future after you already bought the property. You can always refinance. One of the strategies that I have used, I was able to get 3 VA loans, all holding. I bought them consecutively after in conjunction with moves with the military, PCSs, permanent change of station, and I had enough entitlement that kind of let me get to that point. But yeah, let's jump right in. So the VA loans overall, they work a little bit differently than conventional mortgage. It's backed by the VA, like I talked about already. But the VA doesn't issue you a loan. They just provide the backing or for the loan or the guarantee for a certain portion of it. If you go in default, that lender will be made, not necessarily made whole, but a portion of the loan would be paid off instead of when they go to foreclose on you. And so that's the thing that makes this loan very popular, is because it's backed by the federal government. And so they back a portion of each one of the loans against the default. And the unique thing with this backing or guarantee is when the private lenders, that gives them additional confidence that they'll be paid, which that allows them to come in at zero down. They don't need any money from the veteran out of pocket because Uncle Sam's is going to foot the bill if you don't make your payments. And so that's one of the things that is unique about this, about the VA being a government agency and with just the overall backing of the loan. From a mortgage perspective, these loans are considered non-conforming because they're easier credit requirements. They're a little bit more advantageous over conventional because you don't have to put any money down. And the credit requirements are a little bit lower. They're less stringent than with a traditional conventional mortgage. But, with that, with the backing of the government, it gives them a little bit less risk, which is why they can kind of go out on a limb and allow a veteran to come in with a bad credit score or less than stellar credit score, and they still qualify you for a loan and don't take money out of your pocket. And that most veterans, or if you're active duty, you pretty much got a guaranteed job. Unless you're coming up, you're choosing not to re-enlist. It's like you're gonna have to do something really, really bad in order for you to get laid off or to get fired as an active duty military member. But really, as you're going through a typical VA loan process, and this is really kind of similar to any process with qualifying for a loan, you want to get pre-qualified up front, give them the documentations, go through, after that, you want to get pre-approved, give me your bank statement, your last 2 years tax returns, last 2 months of your bank statements, and then your LES or your monthly pay stub. And then you want to give all other cash assets, stocks, bonds, other real estate that's owned, give them all that information, and they'll pull a credit report. And from there, they're going to pre-approve you and underwrite you for a certain amount. Now, you go find a property, put in an offer, and then now you go through the normal underwriting process. You get an appraisal for the house, you get a home inspection, it goes into underwriting, then boom, they give you some terms and some conditions, you meet the conditions, and now you're set to close. And so that's one of the great things with the VA loan, because this was a strategy that kind of put us on the map with our real estate investing. I bought my first home, for those who don't know my story, a year after starting my Air Force service in 2006. Paid no money out of pocket. Actually got $300, a little bit over $300 back. And for me, my rent was over $300 less than what I was paying for my apartment. And I was able to rent the place out when I left. And so for me, it was like, okay, I know I've heard people say you can build wealth through real estate. And so after doing that, I was hooked. 2011, I bought a HUD foreclosure using my VA loan, no money down again, and was able to buy that foreclosure. Then we did it again in 2013 when we PCS to the Northern Virginia area, which there was a little bit more ceiling because it was an expensive area, and we were able to slide in to buy a $280,000 condo that was built. It was 2013. It was built in '07. Paid $280 for it using the VA loan, no money out of pocket. And it was just a crazy deal. Like that property now, that condo, 280, and the condos over there trading for around 435,000 today. And that's zero down. Got into that property, and it's funny. I had a 2006 Corvette that I had bought in 2010. And I sold my Corvette in order to make my DTI, debt to income ratio, work where we could buy that property. And so it was pretty interesting, whereas that I traded that liability in order to buy this asset, and how this asset is going up in time. And it sucked at the moment, but it was the right thing to do, to be a responsible family man and husband, to do that. But so let's talk about, so who qualifies for a loan. For one, you had to serve at least 181 days of consecutive active duty service during peacetime, or you served at least 90 consecutive days of active. If you were fighting in the war, different, it's a little bit different, 6 months versus 3 months. Or you served more than 6 years of service with the National Guard or Reserve, you could qualify for this. Or if you had 90 days under Title 32, with at least 30 of those days being consecutive. So those are some of the different, military ways to check the box. If you serve active duty, reserve, or National Guard, there's still ways for you to qualify for that VA loan. But and one of the things that you have to give to your lender is a certificate of eligibility. And it's just a document that shows, the mortgage lender, that you're eligible for a VA home loan. And, in order to get one, all you need to do is demonstrate that you have proof of service, that you served in the armed forces, and proof of service is not you just showing a picture of you in uniform. You can't do that. That you actually have to go through. There's some different websites where you go through and upload your information, and you can submit various proof, discharge paperwork, or paperwork, current LES if you're active duty, whereas that or active orders that you're on right now, in order to qualify and to share that information with the VA, and then they'll provide you that COE that you can give to your lender. But that's really it. As you go through and identify as a veteran, now you just really got to find the right asset. And that's one of the strategies that I tell people now, that, if you're young, you can look at doing multifamily, buying up to a 4-unit. You live in one side, and the requirements for you live in the property is only for 1 year. You stay in there 1 year, and then you can move out. You can buy another property, relocate, or whatever. And now you're an instant landlord. You have multiple doors already, and you have tenants that are paying down your property over time. And that's a great place to be in. Whereas, especially as a young troop, whether you're on the officer or enlisted side, that's a perfect place for you to be. Whereas that now, starting off your career, you have multiple units, that now you're having cash flow coming in, building passive income, and now you can go get ready to deploy that into another asset. And so that's one of the things that is truly remarkable about the VA loan, and I think a lot of people don't take advantage of, because I know a lot of people who have the VA loan benefit that never have bought a home before, which is just mind-boggling, because it is a great way to build wealth. That's the thing. But, going back to the process, once you verified your service requirements for the VA loan, you need to document your income, your assets. You want to make sure your credit report is good. You check your credit, make sure everything's reporting. You're paying your bills on time. Make sure everything on there is yours, that it's not somebody else, a relative or somebody with a similar name, and it's reporting on there on your report. And we talked about kind of the different types of real estate you can buy. But you can buy condos, townhouses, single family homes, multifamily homes. It stops at 4 units. You can't go more than 4 units. I'm pretty sure you probably could buy a modular home or mobile home as well too. So there's a lot of different options for the type of real estate that you could purchase and use. The VA doesn't have a credit score, but most lenders have a minimum credit score. I think I've seen as low as 620. Kind of in this environment with the higher rates, that lenders are a little bit more risk adverse, so they may have a higher qualification for its credit scores right now. Your income, I talked about the DTI, your debt to income ratio. That takes all of your income and then it looks at the debt that you owe in the monthly payments, and it gives you a percentage to know how much of your income is going toward paying off debt. Can you afford to pay an additional $1,500 a month for a mortgage based off your car payment, all the credit cards that you got, your student loans that you got, and other bills? Okay, how much income do you have left to afford for a mortgage? And that's where that debt to income comes in. You got to document your income as well and share how much money you're making for your job, whether you may have a side business like me. I have my daytime active duty job, but also have my real estate investing company. And then I have my apartment building that produces income as well too. Then I have my coaching business that produces income. I have my royalties from my book that produces income. So you got to add in all your income and then provide that information to your lender to qualify. And then just understand, right now, there is no loan limit to the VA. The VA, it used to be capped at a certain amount, but there's no limit now. It's just a matter of how much that the lender will qualify you for to loan you. And then, you know, from that point, if you get high enough, and then it can go into a VA jumbo loan. Because I think right now, the minimum loan amount, or not the minimum loan amount, but for as a jumbo loan, the minimum is, I think, $647,000. Once you hit that $647,000 loan amount, it turns into a VA jumbo loan. And so anything below that is just a normal VA loan that you could qualify for. And just go through, and I know with the VA loan, because my current house that we live in, that we bought back in November 20, that we did a VA jumbo loan as well too, and in conjunction. And so, and that's the thing, that you can get VA loans while you have another loan on a property. But guess what? If you go over it and you don't have enough entitlement back to go into that property, they will ask you for a portion of a deposit. And I think with this house that we purchased, that we ended up putting about $25,000 down, just because it was a VA jumbo loan and where we were at, and my entitlement was still tied up amongst another property. And so with that, they said, hey, you're gonna need to bring this much money to the closing table for us to lend on this VA jumbo loan, which was good, because I had to refinance out of one of my properties, the one that I told you we bought for $280, that we refinanced that out of a VA loan, and then we put into a conventional mortgage. And then that way I had enough entitlement to bring in, but still wasn't 100%, because I still had my first property that I bought in 2006 that was a VA loan, bought that for $65K. So I still had a portion of my entitlement in that. And so with the purchase price, that we ended up having to bring more money to the table, which was fine for the asset that we bought, which it was a foreclosure as well too. And because it's like, hey, if you can find a foreclosure, you know, put in a little work, and then you can get an enormous amount of equity. But that's a whole nother video to talk about that process and the equity and the play that you can make with buying foreclosures, using a VA loan, enforcing equity, then doing a HELOC or home equity line of credit to tap into that equity, and how you can leverage that to buy more cash producing assets. But yeah, so that's kind of, you know, some of the stories that I did. One other thing that I like to talk about, that the funding fee, there is a funding fee for the VA loan. It ranges from 2.3% to 3.6%. That funding fee is waived if you are 100% disabled veteran. And I think it's a different percentage. And I can drop that in the notes maybe, that, you know, just based off the percentage that they can reduce your funding fee. And it goes up higher if you use your VA loan for more than one time. That second, third time that they're going to max it out, you're going to pay that 3.6% fee to use your VA loan. But that's one of the things that I love with it. You got to pay to play when it comes with the VA loan, but it's so many other benefits. You know, paying the funding fee is just a small setback or negative side of it, but everything else is really positive, and you get the lowest possible rates in the marketplace with the VA loan. So it's all good. And if you're looking to get started and you hadn't really made that leap into real estate, then, you know, definitely check out my video that talks specific to right now. Is 2022 a good time to buy a house? To check that out, because, you know, it just depending on your situation, it may be good, it may not. And then if you haven't got your copy of Millionaire Real Estate Success Strategies, what they forgot to teach you in school, my new book, then definitely drop down in the show notes and go and download a copy of the free PDF, free copy of the book that I'm giving you all for supporting the channel. Make sure you subscribe and hit the like button, and then also hit the bell notification, so when I drop a couple videos during the week, that you'll get updated and be notified. And I look forward to seeing you all on the next video. For my veterans, comment below if you use the VA loan, if you leverage any of the strategies I talk about, whether it's a house hack, whether you lived in it and transitioned to a rental, if you bought more than one door, duplex, triplex, or quadplex using your VA loan, then comment below and just hear some of those stories of people, how they leverage the VA loan to start off in their real estate investing career. That's it, and I will see you all on the next video. Peace.